critical insights on the US strategic Bitcoin reserve, stablecoin regulations, and the broader market structure that for once in a lifetime advocating what is important, what is strategically important for a nation state in any of the strategic growth industries or imperatives that they aspire to, that they think is important for the well-being of a nation. So we all know that as a result of the Trump coming back in office, it's been a complete 180-degree U-turn on what was once that hostile administration from Biden against crypto, against innovation, against Bitcoin, against the fintech players in the digital assets realm. Now that is out of the window and the U-turn has been set, now we are seeing politicians like Lummis coming out into the fold and being part of the Trump administration team to actually start putting the pledges and the promises during the electoral campaign into effect, making it a reality. It's important because it's very rare to see politicians to actually think for once and think what is right for the country in order to bring it up to the world stage in terms of being at the forefront of innovation, being at the forefront of talent, being at the forefront of drawing in capital investment into the nation state in order to become that leading hub that the US aspires to become. I keep on rabbiting on with what's going on in terms of events in the US political class because other Western governments should follow with the example that Trump is trying to establish. He wants to establish the legacy. He wants to establish the US being at the forefront and being the hub of all that strategic growth industry in terms of crypto, AI, and a leading innovation and pro-business investment. That's what he's trying to position the US to become. So that's the first point. Now let's go on to my coverage or takeaway that I'd like to leave with you. She's talked about an awful lot. She's mentioned about the orange pill moment of that 180-degree U-turn into that of becoming pro-crypto, pro-Bitcoin, pro-AI, pro-business, pro-innovation into the country in order to set that US as a leading hub in the world stage. So that was the orange pill moment explanation that Senator Lummis have actually articulated in an interview earlier on. So it was a night and day effect in terms of position the US government to now be seen to be actively supporting Bitcoin, the mining, the crypto, the digital assets industry at large, as well as policy, regulatory policy and frameworks development, which is important in order to provide that clarity that the once desperate crypto industry needs, right? In order to draw in capital, you need to be able to set the rules of engagement. And on the eyes of Senator Lummis, in terms of positioning Bitcoin as that strategic reserve asset at the federal level, as well as the rest of the digital assets stockpile and the stablecoins market restructuring that she plans to push through. She went on to explain the nature of the US Bitcoin Act. Now, the proposal is to not just to set these Bitcoin as a strategic reserve. What he's going to be planning to do is find the budget neutral way to add more Bitcoin into the strategic reserve without adding additional burden in terms of taxpayer money in order to acquire that. The most budget neutral method out of many that are probably working at the moment is to sell the gold certificates, not the gold, mind you, but the actual gold certificates, the paper certificates that denominate a certain element of ownership on the underlying gold reserve. So that makes sense to me. Rather than selling the actual physical gold bars that are held at Fort Knox in the US, they're going to be selling off the paper representatives of the ownership of gold they have via these gold certificates. Now this is a great idea because they already have, I assume, billions upon billions amount of paper gold certificates at their disposal. And if you take that and convert it into Bitcoin and add the Bitcoin acquisition as a result of that into the strategic reserve for Bitcoin, that is fantastic, because if you hold it for 10, 20, 30 years, which is what Senator Lummis have explained, is going to go up in price quite significantly because of that accretive factor. The longer you hold on to this asset, because it's not a speculative asset, it's not day trading type asset, it's a long long-term store of value asset that you want to be able to hold on into the very long term. Idea behind that is if the US, for whatever reason, and remember they have a humongous or whopping $37 trillion deficit that they need to be able to balance the books on. Well, let's say by the end of the 20-year cycle, they want to add 1 million more Bitcoin during the course of the next 5 years. Well, let's say by the end of the 20th year of holding that amount of Bitcoin, they want to be able to relinquish, I don't know, 1, 2, 5% of that in order to pay off the $37 trillion deficit, because at that point, it's going to be market to market value, which would be higher than the original cost that they purchased 20 years ago. That is their model on the only situation where they might relinquish some of their Bitcoin holdings held on the National Strategic Reserve. This makes total sense. These are the sort of important decision making that we expect from politicians in this 21st century. Now, I want to touch on the question being raised about meme coins. They should be treated as an entertainment type asset, not as an investment asset like Bitcoin, right? You can think of meme coins as predominantly non-fungible tokens, those NFTs, and have some kind of gaming entertainment value. The meme coins are not to be invested with because we have seen many of those in history. There's thousands upon thousands of these meme coins. They've been launched, been pumped up in value, and when it reaches a certain threshold, what typically would happen is it will be dumped. So it's more like a Ponzi scheme operated by a fintech player who actually manages the private issuance of these meme coins. So this is the reason why Lummis, and I really wholeheartedly agree on that please, investors should stay away and never ever please invest in meme coins. It's just an entertainment value, not an investment value. Okay, that is the key point. I want to move on to stablecoins, which is a key area because I have actually published quite a few videos on the differences between how I see stablecoins playing out within the crypto space. If you compare it with CDBCs, if you compare it with Bitcoin, and if you compare it with other digital assets or other digital tokens or cryptocurrencies, right? So for me, stablecoins are like bringing the old fiat currency on the digital rails. So let's take the example of the digital US dollar is Tether. So we have Tether stablecoin, and it's used, and I quite like the idea, it is used or can be treated as a traveler's check. Now, for those boomers out there or Gen Xers, which is what I am. So if you think back in the old days, in the 80s and 90s, where we are planning a holiday and we need to get some extra traveler's checks or checks in order to cover our expenses when we're out in our trips overseas. That for me is stablecoins. And why do I make that comparison? Because I want to really make it clear that stablecoins is treated as a medium of exchange and not as a store of value. Why this is important, that distinction, and why do I think stablecoins has a pivotal role in the overarching digital asset space is precisely because stablecoins are pegged to the old fiat currency. In this case, we have the US digital dollar, which is Tether. It's a stablecoin. There are other fiat-backed stablecoin versions. So this is only meant to be used as payment rails, making cross-border payments. It removes the need for having a third party or a middleman. And most importantly, it's not just to reduce time for payment settlement, but also reduced fees. You can use Bitcoin as a medium of exchange, but given the main principle behind sound money is the scarcity and the stock to flow. So the difficulty it is to mine new Bitcoins, and if there's a capped supply after which you can't make any more Bitcoins in circulation, that is the sound money principle that should trigger our minds that we should use that as a basis of store of value, not as a medium of exchange. Because there won't be any more possibility to create more Bitcoins once it reaches the 21 million capped limit supply of the Bitcoin asset, which is in stark contrast with stablecoins. They are fiat-pegged currencies on the blockchain, and any governments, central banks, or private issuers of these stablecoins can be produced more and more and more, which is not perfect money. If you refer back to my videos in my channel, which is the reason why you ought to subscribe, I have published several videos explaining what is Bitcoin, what is the history of money, what is the difference between Bitcoin with stablecoins, right? Because there's a lot of currency debasement happening in the world with the US dollar, with the euro, with the pound, and every other fiat currencies out there. Our savings and our investments will depreciate precisely because of the fact that governments are into the habit, irresponsible habit, mind you, of printing money. And as you know, where there is more printing of money, there is more inflation, which means our assets will decline in value, which is not the case with Bitcoin, which is why I keep emphasizing that Bitcoin for me is the ultimate savings technology, the ultimate store of value for your wealth preservation and growth in the long term. Stablecoins for me is medium exchange, momentary, covering my expenses, which is what Lummis have explained eloquently in the interview, right? So just to round off, you need to save your Bitcoin and spend your dollars using stablecoins. So if you enjoyed today's episode, please don't forget to hit the like button and to share the video to family, colleagues and friends. And if you haven't done so already, please subscribe to my channel, as I regularly publish some midstream videos such as these, anything to do with Bitcoin, blockchain technology and the future of finance. So I'll see you next time.